Hi and welcome to the Martin Bell Show. Hopefully you've all been keeping well, and today's video is going to be a brief update of my investment portfolio into my SIPPs. So let's begin. So as you may be aware, I have sold out all my positions in trading 212 as I will be moving my ISA over to AJ Bell, and that transfer process is taking place at this moment in time. I may not stay with them because they are increasing their fees, and I may transfer again in a new tax year to Hargreaves Lansdale and move my ISA to that, or I may even eventually go back to trading 212 in the future. But for now, the reason being is I don't know about the viability of trading 212, of it being commission free the whole time, because they have to make their money somehow, and they've reduced like the CFD thing. You have to do more research into it if you want to know more. Basically, people can't take out as much leverage before, and that means eventually I think we will have to start covering the costs. So that's the reason why I moved, and I'll just rather pay my £10 for the commission of buying the shares, and I know the company's going to be there in at least a long while. So what I'm doing is eventually saving up sums of money every now and then once I get enough money, and then I do a purchase, because there's no point doing a purchase of a share, or like one share for the commission it is to buy the shares, because it's around about £10. So I save up around about £500 or more, and then I do a bulk purchase. So we are on my SIPP pensions here. So as you can see, obviously it's a brand new portfolio, all brand new, and I've still got to update it more and finish it up, but it's practically there. So at this moment in time, I only have 2 positions currently open. As I said, I shouldn't have really bought that one unit, but that was just to open a position and trial it out to see how the process works. I have to say I much prefer the contract notes with Hargreaves Lansdale. They are superb, and I am really liking the company so far. So the only investments I have is 2 ETFs. One is the FTSE 100, iShares FTSE 100, and a UK government gilt ETF. So I have 76 units of this year iShares FTSE 100, which is at this moment, if times get a little bit better or things improve a bit more, I'm thinking I get around about 6p per quarter or 2p every month, which is going to average me out around £4.56 every quarter that pays, or around £1.52 every month, or £18.24 a year. The bond drips around 3p a month, or 9p a quarter, or 36p a year. So at this moment in time, I am roughly around £4.65 every quarter, or £1.55 every month. And remembering that this is a SIPP account, so this is my pension, a private pension, where I am obviously got my state pension, and I obviously got my workplace pension, and then I got my SIPP pension. So I have 3 pensions. The maximum I think you can put in a year is 40,000, but I am nowhere near that. Or even if I did, I'd have to earn a lot more to put the full 40 in. It would be a dream to be able to do that, but I can't just do that at this moment in time. And I think you can carry it forward as well. If you don't put the full 40 in from previous years, I think you can carry some forward, but please don't hold me to that. Please do your own research before trying to do that. So yeah, I'm really liking my potential. The Hargreaves Lansdale, the way they post things, they obviously I think every month they tell you what your portfolio is, and a breakdown. Really liking it, and I really do like Hargreaves Lansdale. It is more pricier than trading on 212, but as I said, I'd rather pay that £10 per purchase, and I know that I am going to be more secure with my investments. As obviously at the moment in time, I've only got about £500. Before that, my trading 212 I had about £3 invested. It would be upsetting, say, if something happened to trading 212 happened and I lost that £3. but it would be even more painful if I had like hundreds of thousands. So that's the reason my thinking, I'd rather pay that £10. And I'm not going in and out, I'm not selling and buying, I'm not a trader, I am an investor for the long term, so I'm not a flipper. So I'm just basically buying and holding and buying more, unless something fundamentally changes, which shouldn't be, because most of mine are ETFs in broad markets, which is why I'm doing this for my retirement portfolio. My ISA will probably be some more individual stocks, but I'm going to be keeping the SIPPs to mainly broad-based ETFs in different sectors, as like broad-based sectors and real estate, and some single stocks, some bonds, and some government bonds and corporate bonds. So it's got a mixture of different things in there to diversify my portfolio. Really looking forward to making more content, really looking forward to investing, and looking forward to and preparing for my future and saving for the rainy day. And this is why it's so important to delay gratification and invest now. You don't have to do a large, so the more you can invest, eventually it could be more in the future, but there is no promise of future of gains or losses in the future. So it's about taking calculated risks and realizing that eventually the stock market does tend to always trend upwards. It does have down years, but generally it is on an upwards trend. So that's a little update of what's happening with my channel. Hopefully you like it. I will be buying some more shares again soon. I will update you when my transfers happened with my ISA is transferred over to 212, and also the reason being is that obviously something really bad does happen. If you have, I think it's protected up to £85,000 per. Let's say if you make a loss of like a stock went down and you sold it, that doesn't count. But if something really bad happens, your investments are protected. I think it's up to £80,000 per institution. So that's the reason why I've gone for my SIPP into Hargreaves. So I've got 80 grand protected there, and AJ Bedell, and I've got another 80 grand there. So it's potential protection of 160,000. But I don't see anything happening to them companies at this moment in time, and that's why I also print out my contracts notes, so I have all my paperwork in order. So if anything happens, I can like, here you go, this is what I owe, and please may I have it back, please. So if you like this content and you want to see some more, then please feel free to subscribe to this channel, and if you click the bell notification, you get notified when I next release a video. And if you smash that like button, it really helps the algorithm and let them know that you're liking the content to get me recommended more, and you get recommended my content more. So I will be releasing some more video games and hopefully some book reviews soon. Thank you for watching, and I really look forward to seeing you all again soon.